Bitcoin, the digital money that shook up the world, is getting ready for a significant event, the next halving, scheduled for April 2024. This event is causing excitement in the cryptocurrency world because this time, the reward for mining Bitcoin will be cut in half, from 6.25 Bitcoins to 3.125 Bitcoins for each block mined. It's a way to keep Bitcoin valuable. This halving isn't just any event, but it's a significant milestone for anyone interested in cryptocurrencies. In the early days of Bitcoin, the digital landscape was vastly different from what we see today. It was a time of experimentation, innovation, and a healthy dose of skepticism. Satoshi Nakamoto, the mysterious mastermind, laid the foundation of Bitcoin. Before we get into it, let's understand what Bitcoin is all about and explore how it began and what makes it unique. It all started with the publication of the Bitcoin white paper in 2008, under the pseudonym Satoshi Nakamoto. He outlined a vision for a peer-to-peer electronic cash system that would bypass traditional financial institutions. This groundbreaking concept captured the imagination of a small but passionate community of cypherpunks, cryptographers, and tech enthusiasts. On January 3rd of 2009, Nakamoto mined the genesis block of Bitcoin, known as Block 0. Embedded within this block was a message that would go down in history. This timestamp not only marked the birth of Bitcoin, but also served as a poignant commentary on the flaws of the traditional banking system. In the early days, Bitcoin was more of a curiosity than a viable currency. Mining Bitcoins was relatively easy, and early adopters could amass substantial amounts with little effort. However, the value of Bitcoin was practically non-existent, and its use cases were limited. Despite these challenges though, a small community of believers rallied around Bitcoin, contributing to its development and propagation. Forums like bitcointalk.org became hubs for discussion, collaboration, and exchanging ideas. Developers experimented with different applications of blockchain technology, laying the groundwork for what would later become a thriving ecosystem of cryptocurrencies and decentralized applications. However, along with its success came challenges and controversies. Bitcoin's decentralization nature made it attractive to criminals and regulators alike. Silk Road, an online marketplace for illicit goods and services, became synonymous with Bitcoin's early association with the dark web. Despite these setbacks, Bitcoin continued to evolve and mature. Nakamoto's departure from the project in 2010 didn't hinder its progress. A vibrant community of developers, entrepreneurs, and enthusiasts took up the mantle, driving innovation and pushing the boundaries of what was possible with blockchain technology. Bitcoin's price journey has been nothing short of remarkable. Emerging quietly in 2009, its value was almost negligible. In those early years, there were no exchanges or markets, and cryptography enthusiasts mainly used Bitcoin for experimental purposes. In 2010, Bitcoin made its first significant mark on the world when Laszlo Henniks famously bought 2 pizzas for 10,000 Bitcoins, a transaction that would later become legendary as the first tangible use of Bitcoin. By February 2011, Bitcoin had reached parity with the US dollar, signaling its emergence as a legitimate currency. The year 2013 saw Bitcoin experience a meteoric rise, with its price soaring from around $150 in October to over $1,000 by November, marking a historic milestone in its journey. However, 2014 brought significant volatility and decline in Bitcoin's price, reaching its lowest point since the 2012-2013 crypto riot financial crisis. Yet, Bitcoin experienced unprecedented growth in 2017, reaching milestones such as $2,000 in May, $5,000 in September, and nearly $20,000 in December. However, it also faced significant corrections and volatility, highlighting the rollercoaster nature of its price journey. The correction continued into early 2018 with significant drops in value, signaling the end of the bullish trend seen in the previous year. Bitcoin saw a gradual recovery in 2019, reaching highs of over $10,000 in July. However, the onset of the COVID-19 pandemic in early 2020 led to a significant price drop, reflecting broader economic uncertainty. In 2021, Bitcoin surged to new all-time highs, surpassing $50,000 in February and reaching over $60,000 in April. Increased institutional adoption and mainstream acceptance contributed to the bullish trend. Despite challenges in 2022, including market crashes and regulatory concerns, Bitcoin demonstrated resilience, bouncing back from lows and continuing its upward trajectory. In 2023, Bitcoin saw a resurgence, surpassing previous highs and reaching new records. By the beginning of 2024, it had soared to unprecedented levels, reaching $70,000 in March, highlighting its enduring appeal and potential for growth. Through every twist and turn, Bitcoin's price journey reflects its resilience, adaptability, and the evolving landscape of digital currency. Now in April, the cryptocurrency world is buzzing with anticipation as another significant event approaches, the Bitcoin Halving. This event, scheduled to occur approximately every 4 years, is a pivotal moment in Bitcoin's history and has profound implications for the entire crypto ecosystem. But what exactly is this Bitcoin halving everyone's talking about? The Bitcoin halving is a fundamental aspect of Bitcoin's protocol, designed to regulate the rate at which new Bitcoins are created. It's essentially a process where the reward for Bitcoin miners, those who validate transactions and maintain the network, is cut in half. This reduction in rewards occurs automatically once a certain number of blocks have been mined, typically every 210,000 blocks. The purpose behind the halving is twofold: to decrease the number of new coins entering the network and to ensure that Bitcoin remains scarce and valuable over time. Since Bitcoin's inception, several halving events have been marked by a significant reduction in the block reward. Looking back at the history of Bitcoin halvings, we observed 3 significant events. The first is in November of 2012, followed by the second in July of 2016, and the most recent in May of 2020. Let's examine how the price of Bitcoin behaved before and after each halving. So, during each Bitcoin halving, the price dynamics displayed intriguing patterns both before and after the event. The first Bitcoin halving occurred on November 28th of 2012. Before the halving, the price remained relatively stable with minor fluctuations. About 100 days before the event, the price was around $12, which rose to about $42 by the time of the halving. Following the halving, the price continued to rise steadily, eventually reaching $964 1 year later, marking a significant increase from its pre-halving levels. The second Bitcoin halving took place on July 9th, 2016. Similar to the first halving, the price of Bitcoin experienced stability with minor fluctuations in the months leading up to the event. About 100 days before the halving, the price was around $663. Initially, there was a price increase reaching around $609 within 100 days post-halving, followed by a short-term correction. Subsequently, the price embarked on a bullish trend, peaking at $2,550 about 1 year later. The third Bitcoin halving occurred on May 11th, 2020. In the period preceding the third halving, Bitcoin's price demonstrated significant volatility. Approximately 100 days before the event, the price stood at approximately $8,740. Following the halving, there was a notable increase in the price, with Bitcoin reaching around $11,950 within 100 days post-halving. However, market conditions were influenced by the onset of the COVID-19 pandemic, leading to fluctuations. Historical data suggests that while short-term fluctuations may occur around the halving, Bitcoin tends to experience significant price appreciation in the months following each event. Now, the crypto community eagerly awaits for the next halving event set for April of 2024. So, how does the Bitcoin halving work exactly? Really, it's quite straightforward. With Bitcoin's code, there's a provision that dictates the halving schedule. When the predetermined number of blocks is mined, the halving event is triggered, instantly reducing the block reward by half. This process recurs roughly every 4 years until the total supply of 21 million Bitcoins is reached. Now, you might be wondering about the impact of these halving events. They're quite significant. Historically, Bitcoin halvings have been associated with price surges and increased market volatility. The anticipation of reduced supply often leads to heightened demand, driving the price of Bitcoin up. However, it's essential to note that halving's impact on the market isn't guaranteed, and various factors can influence price movements. Despite potential short-term effects, the Bitcoin halvings play a crucial role in maintaining the integrity and security of the network by gradually reducing the block reward, ensuring that the supply remains limited and preserving its value as a decentralized digital currency. As we look forward to the Bitcoin halving, it's a significant reminder of how far Bitcoin has come and its importance for the cryptocurrency world. This halving will mark a significant moment, showcasing Bitcoin's strength and innovation and helping it grow even more valuable in the future. Interesting ways, potentially coinciding with price increases by cutting the supply of new Bitcoins. The event itself also attracts attention, potentially bringing in new investors. Regulations around Bitcoin are a double-edged sword. Stricter rules could cool investor sentiment, but they could also legitimize Bitcoin, attracting larger institutions. With new technology and rules being created, we're not exactly sure what the future holds for Bitcoin, but there is a lot of potential for it to keep growing and changing the way we use money. What are your thoughts on this upcoming event, and what do you think about how it will affect the value of Bitcoin and the cryptocurrency market? Please let us know down in the comments section below.